To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. An infinite amount of cash at the Federal Reserve. An infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks mostly slid on Wednesday, continuing a bruising stretch for tech stocks as investors weighed the latest retail earnings and assessed the Federal Reserve's minutes for clues on interest rate cuts. And guys, very similar story to yesterday is what we saw today. The mega caps really took it on the chin. Look at Tesla, look at Amazon, look at Google, look at Meta, look at names like Nvidia, AVGO. Apple was down 2% today, and so too was Microsoft. Sort of the AI names, the big tech names, the semiconductor names, they all took it on the chin today. Software was largely mixed, but everywhere else was actually very, very green. In fact, what we saw today was, again, like yesterday, every sector gained except for these tech sectors, XLY, XLK, XLC, and then industrials right here was down 0.09%. You can see here that the SPY, because of the weight in the tech sector, was down 0.68%, but the RSP, the equal weighted S&P 500, was virtually flat. Now, there is a little bit of concern because we can still see that gold was up 1.01%, but that could be largely attributed to some of the things we heard in the FOMC minutes. We'll talk about that. And guys, what we're really seeing right now is simply a rotation. When I was younger, right, I used to confuse sector rotation with a market top. It's not a market top. Rotation is what keeps bull markets alive. And don't get me wrong, we can rotate at these highs and the market can pull back 5, potentially even 10%. But if we do see this continued strong rotation that really started at the start of this week and it continues through this month of August, September, that is going to keep the bull market alive. And ultimately, this is telling us that this is just a dip buying opportunity, and it might be time to start looking at mid caps, small caps, equal weighted S&P 500, Russell 2000, higher beta names, because they are showing relative strength, especially when you look at it compared to the AI winners. It's not to say go ahead and sell, Google or Meta or Com Services. No, those stocks will still win. It's just that we are seeing a rotation, and that's very, very healthy, especially in a bull market. And this exemplifies it right here. You can see that large cap value was really, really green, outperforming every single sector. But then when you look at the value side of the market, right, it outperformed the mid cap. It outperformed the growth side of the market, but still red, relatively speaking. However, this right here is Morningstar's one. I think if you look at a market aggregate index version, it'd probably be a little bit different than this. However, we saw mixed price action globally. I mean, China was green. China was red. Japan was red. India, Southeast Asia was green, along with Australia. Europe was a very mixed bag. North America was mixed. South America was mixed. Just a mixed day through and through. And I think this all stemmed from the FOMC minutes. Now, I'm not going to bore you and go ahead and read everything. I'm just going to cover the major things we saw. And I think the biggest thing from Wednesday's release of the minutes from the Fed showed that the two policymakers who voted against the decision to leave rates unchanged appeared to be largely alone. That was Bowman and Waller, right? And I think the big thing why we saw gold actually spike today was the majority of officials were more concerned about the upside risk to inflation than the downside risk to the Fed's mandate for maximum employment. And I think this really goes to show that the Fed are not really looking ahead. I think right now the Fed should be more concerned with the employment picture than the inflation picture, because when you look at like certain inflation measures like trueflation, right, we're not seeing a bump up in tariffs. Trueflation is at about 2%, whereas, the unemployment situation, that has been deteriorating. And so to see the Fed more concerned with inflation really goes to show they are being data dependent on what has been and not looking ahead. That being said, the FOMC minutes, it really was just a nothing event. What really did sort of move the markets today was Trump came out and called Fed Governor Cook to resign over mortgage allegations. Trump believes they falsified bank documents and property records to acquire more favorable loan terms, potentially committing mortgage fraud under the criminal statute. And if that is the case, Fed Governor Cook needs to be prosecuted appropriately, in my opinion. But what really moved the market today, I feel, was some of the earnings names. Now, Target's dropped their earnings results, which eked out a slight profit beat and held its guidance, but pressures from tariffs and a squeezed consumer added to another downbeat quarter and will pose challenges for the newly announced CEO, Michael Fidelki, its shares sank 6%, but at one point was down 10%, as you can see right here, and then actually rebounded to be up 6%. Not an encouraging quarter from Target, but not a terrible quarter either. Lowe's was virtually flat on the day. The home improvement retailer reported a return to same-store sales growth, echoing positive results from Home Depot on Tuesday, and the market seemed to like this. You could see that the stock was actually really upbeat here when the earnings were released. Now, Estee Lauder was down 4%. After they disappointed the street's profit forecast, an executive said they expect a $100 million headwind from tariffs. Toll Brothers stock fell nearly 1%. The home builder reported an earnings and revenue beat on Tuesday afternoon, though new orders were less than analysts expected, and La-Z-Boy was down 12%. And at one point was down as much as 20% after the company missed estimates amid soft demand. Sales for its Joybird furniture brand declined 14% as well, so a lot of cyclical issues. And Baidu shares were down 2.59% today after the Chinese search engine company reported a drop in second quarter revenue as strong growth in cloud services was offset by weakness in its core advertising businesses. And then for everything we saw today, there was a 2,900 advances, 3,200 decliners. We saw inflows in the New York Stock Exchange, outflows in the Nasdaq 100. Again, look at that rotation that we're talking about, that market sector rotation, with the S&P 500 down 0.24%. And again, market momentum continues to remain strong. We actually saw an improvement here in the 5-day. That is very positive. And everything from the 20 to 200-day remain above the 50% mark. Now, the S&P 500 fell 0.24%. The Nasdaq was down 0.6%. And we actually saw selling across the board. The RSP was virtually flat, but down ever so slightly. So you can actually see that through and through, even though we did see that sector rotation under the hood, we did have a red day in equities for the most part. Futures also looking a bit sanguine. The US 100, the Nasdaq 100 index is up ever so slightly in the after hours, but the S&P 500, the Dow Jones, and the Russell 2000 is down. Internationally was slightly better. Middle Eastern stocks were down. Europe stocks were up. Chinese stocks were virtually flat. India stocks were up. And we saw crypto ripping here after finding support for both Bitcoin up 1.3%, but Ethereum up 6%. But Ethereum up 6%. We'll talk about that a little bit later. Volatility was up ever so slightly. The 2-year, 10-year, and 30-year yield continue to move lower, so the market still expects a September rate cut, and it's pricing that in even more so for the end of the year. The dollar was largely flat. TLT gained, and then gold and silver were both up 1 and 1.65% respectively. Now, looking at the S&P 500, the weekly chart, you know the drill, guys. We're in a very clear uptrend, right? We're in a very clear uptrend. We are expecting a little bit of weakness here in August and September, coupled with a bit of sector rotation that should confirm the bull market activities and should confirm continued strength looking ahead. Now, diving into the daily chart, we can see some very interesting stuff. Now, let's quickly just zoom out here. And you can see that we've had a very strong rally off these Liberation Day lows. And we have sort of had a market stall up here. We've had a bearish engulfing candle, but we did sort of par that, go ahead, make new all-time highs, find a little bit of weakness right here. And we are in a daily downtrend. Now, what's really interesting about today's candle, right? This is called a bullish doji, right? So it's still a red day. However, a massive wick at the bottom right here is telling us that the bulls came in a very big way off the lows and bought the dip. However, it wasn't enough to get us back to the day's open or take us positive. In fact, if we just look at a one-day chart, this is what it looks like. You can see we had a waterfall decline early on right here. We then actually put in a low and we just made higher highs, higher lows on the way to not quite daily highs, but definitely some buying opportunity. So it's very easy to see the bulls are finding value in this area right here. And they came up and they came out and bought the dip. Coupled with the fact we did see outperformance in the RSP, this is largely positive. And when you look at the RSI, we can see that some of these overbought conditions we've experienced in recent weeks are being worked off. If we can have more of this being worked off in the S&P 500, that would be really good. Overbought conditions can be worked out by either the stock market trading sideways or the stock market moving lower, and then you'll see this move low. And for the most part, what the S&P 500 has done over the last couple of weeks is virtually nothing. We're just consolidating a lot of the gains we've made right here, and that's very healthy. And that consolidation is actually coinciding with sector rotation. We know this because of the RSP. We can see outperformance in the RSP, mid caps and small caps. And in fact, if you look at it over the last week, we've seen very clear outperformance from the equal weighted and some of these smaller, higher beta names. Now, looking at the Nasdaq 100, very similar situation, except the Nasdaq 100 bounced right off the gamma flip zone, as you can see right here. So technically putting in a higher low, as you can see. And if we actually take a measured move in the Nasdaq 100 from peak to trough, we're approaching
touching that first 5% level, right? So remember, guys, I said every 5, 10, 15% at those levels, you sort of want to add to your portfolio whatever stock you're holding, whatever ETF you're holding. And that way, especially in ETFs, right, you're going to be adding at very strategic levels. And that way, sure, you can see more downside, but, you'll just buy more of the ETF. And then if you do get upside, you've allocated more capital at lower, more opportunistic levels. But we did see a very big wick, very similar to what we saw in the S&P 500. And if we actually go to some of the mega cap names, let's see what drove this performance. If we go ahead, look at Meta, we saw Meta came very, very strong. So Meta, if we actually see what it returned today, it was down 0.5 percentage point, but very, very strong. If we go ahead and look at Google, we can see that Google right here came up. Again, another strong week. Google was leading the charge. If we go ahead and look at something like Nvidia, right? Nvidia, very, very strong. In fact, pretty much flat on the day, positive here in the after hours. So, when you look at the index, it's made up of individual stocks. The market participants were coming out and buying sort of these AI names like Nvidia. I'm sure AVGO was also on that list. Yes, AVGO was on that list. I'm sure AMD was on that list. So a lot of these AI names, you can see strong wick right here, an equal bottom. A lot of these AI names will be bought. Google's an AI name, Meta's an AI name, Nvidia, AMD, AVGO. These names were bought. But you know what names weren't bought in this dip? Stuff like Apple. You can see Apple finished at the lows of its day, right? So it has been very, very strong. And look, it does have to consolidate this move right here. But Apple is not particularly an AI play per se. And what we did see was that the market didn't come out and buy that dip like it did with something like Nvidia. So that is something to note right there. But through and through, everything looks largely positive. We're definitely seeing outperformance in the RSP, where we are seeing the S&P 500 move lower. The RSP is actually holding these gains pretty much at these highs. This is all-time highs here for the RSP. So very, very solid stuff from the equal weighted market. I was seeing very similar stuff from the Russell 2000, although the Russell is moving down a little bit lower. I mean, if we look at mid caps, it's looking a little bit better, and then the S&P 600 looking a little bit better. But ultimately, right, the place where I think you want to be is sort of like in that broader market index. You still want to be in large caps, but you definitely do want to allocate some stuff allocate some market money to small caps. I like quality small caps, and even just the S&P 600 and the S&P 400 mid caps. Those are definitely indices you want to be in. It's also probably a good idea to allocate some capital to, European stocks, guys. I think we can see a breakout is forming. We broke above. We're retesting right now. And ultimately, if we hold this level, we can move higher. I think if we do get like some form of a peace agreement or a ceasefire in the Russia-Ukraine situation, that can be very, very positive for European stocks, and they'll fly on the back of that. Now let's actually go ahead and look at Bitcoin and look at Ethereum. Now, Bitcoin, this is Bitcoin right here. We're finding support at this level right here, this 112,000 level. Now we know because of M2 money supply, the market is expecting us to go higher, but we're finding support at this very, very key level right here, where we used it as resistance here, broke above, used it as support once, and we're using it as support right now at this level. So ultimately, if we hold this level right, you'd expect Bitcoin to do something like that and then move onward and upward, retaking these all-time highs. And ultimately, we're looking for upside momentum very close to this 140,000 level, somewhere around here. So there is still room for Bitcoin to continue its move to the upside before we do see some sustained downward volatility. Ethereum, the trade is much, much simpler. We said we were looking for support right at this line. We got it. In fact, we've eclipsed yesterday's open. Today here for Ethereum, it looks like we're actually going to open the day right there in a couple of hours. The new day for Ethereum will open, and then I think onward and upward from there. So as long as we hold support at this 4,000, this key resistance area, I do think we go ahead and retake these highs and ultimately all-time highs. If you go to a weekly chart, you can see these are the all-time highs at the 4,800. I want to see Ethereum go ahead and hit the 5,000 area, but we broke above this key resistance zone right here. This was a strong line in the sand. We broke above it. Now we're going to use it as support, and then we can continue onward and upward, retaking these highs, all-time highs, trend continuation. And the second we break above these all-time highs, that's when price discovery happens. And then from there, the sky is the limit for something like Ethereum. So you definitely should have anywhere a 5 to 10% allocation to crypto. I don't see how you don't have that in your portfolio right now, guys. Looking at the 10-year yield, we looked at this yesterday, but on the weekly chart, we continue to be in this very, very clear downtrend. It's more clear on the daily chart, and you can see we are moving lower. If we look at the 2-year yield, the market is telling us at 3.75% level that we definitely do need rate cuts in this market, at least 50 basis points, but ultimately we're looking at 75 basis points through year end. We'll see how the 2-year yield reacts come September, and as the data continues to evolve. The dollar continues to consolidate here. I am expecting a little bit of upside momentum in the dollar, simply because everyone is so bearish on the dollar as it is right now. And then guys, I think the stock that everybody is sleeping on, if you're looking to, buy an AI related stock, is definitely CoreWeave, right? So this stock just IPO'd, and this does not look like a very, very solid technical chart. You could see a high right here. We put in a low, lower high, lower low, but the stock just IPO'd, and it's really, really hard to do technical analysis on stocks that have just IPO'd. You really want to look at the fundamentals, and the fundamentals for the company continues to just outperform, right? They're growing revenue very, very fast. Yes, they do have a lot of debt, but Jane Street just declared a position that owns 5% of the company. The IPO lockup is pretty much done. That's why we saw this sell off right here, right? So I think we're going to find support with something like CoreWeave, and then we'll go from there. I think we're going to find support anywhere from the $90 to $85 level. I think if you go ahead and actually sell cash secured puts at the $85 level, that should be good. And I think ultimately you do want to have a wide margin of safety. So I'm saying that the absolute low could be the $65 area. So do be prepared to add into this position at strategic levels. But ultimately, I think we should find support here at this 85, potentially as low as $80 level. But do be aware that there's a lot of risk when it comes to these high beta names. But all in all, I do like CoreWeave looking ahead as like a key picks and shovel AI play looking ahead for the next 5 years.
And guys, quickly looking at sentiment, this is 314 sentiment composite index. And as the S&P 500 has hit all-time highs, so too has the sentiment composite hitting extreme optimism. And logically, you would say the market should cool between, mid-August, early September into the early October time. And you would, in that time frame, look for a drawdown of about 10%, a max drawdown. So you would say, a typical drawdown of about 5 to 10% is probably what we're looking for. Have sentiment cool off, have the market reset before we put in a higher low and springboard back to all-time highs into 2026. And how do we know that is the case? It has to do with earnings and earnings revisions. The typical path of earnings is right now in line for 2026, and we are looking for about 14% earnings growth. Right, this is just the revisions estimates. And 2025, even with the tariff tantrum, we're still tracking above the average and median path of the S&P 500 bottom-up EPS consensus estimates. So this is looking really, really good for us to finish the year strong off with regards to earnings and to enter 2026 looking at for mid-teens S&P 500 growth. And something else we're seeing is the market broadening out. Now, you may look at this and say, yeah, but we've had a number of days where we've had advances less than decliners. Why is this day special? Now, this day was actually yesterday. It's not today. The reason why this day was particularly special for the S&P 500, and it was true for the S&P 400 and S&P 600, is simply because when you look at the RSP, the S&P 500 equal weight, yesterday it returned half a percentage point. The S&P 500 itself was down 0.59%. I spoke about this at length in yesterday's video. Go ahead and look at yesterday's video if you want more deeper understanding. But long story short, when you see this type of divergence coupled with great market breadth, that is a really strong indication that we are about to rotate. Now, in that rotation, because of the weight of the mega caps, we can actually see the S&P 500 fall like 5%. But as long as the underlying fundamentals and the underlying market structure continues to remain robust with solid market breadth, earnings looking very, very good, and a clear structural shift in momentum, that tells us that this is simply a dip buying opportunity. So if we do get that pullback, if we do get this pullback that we are currently in the midst of here in this, September, August, potentially to late October period, buy the dip. Now, there are some risks. This isn't a risk-free market. This isn't just a dip you should buy. We do need to pay attention to some of the macro because there are some concerning stuff that we are going to tackle. Number one, we got housing starts yesterday and single family starts remain below the 80,000 level for the month. The 3-month moving average for single family starts hitting the lowest point in over 2 years. The housing market remains functionally in a recession. And the bottom line is that activity cannot stay here indefinitely without impacting construction employment. Eventually, the gap between activity, which is units under construction, and employment will close. And that can cause some real problems in the housing market. And how do we fix that? Jerome just needs to cut rates. And right now, that's what the market is sniffing out. The market believes that in September, we are going to get a 25 basis point rate cut. That is at 70% odds. 28% at no change. At one point, this was 90%. This is the betting markets. It is poly market, but it does look like we are going to get a rate cut. And normally when we get one cut, we normally get a slew of cuts. And this is what you can expect in the S&P 500 if we do get cuts. Now you can see right here, this is the first cut of a soft landing. I don't think we are going to get a recession, but what normally happens is we actually trade sideways to down, as you can see right here. Normally, right before we get that cut, we
which would be the time period we're in right now, we actually churn. And you can see that we normally do churn for about 30 up to 40 days later. That would put us into the mid-October area before we actually put in a bottom and then rally back to all-time highs, averaging about a 7 to 8% return off these lows 6 months later, which is very, very solid stuff for the S&P 500. So all in all, guys, expect rate cuts. It should be good for the economy. It should be good for the S&P 500, but it all is dependent on the data. And the data that we can expect to see tomorrow is existing home sales. So more housing data. The consensus estimate there is for 3.92. We had very mixed housing data right here. FOMC minutes was nothing. Existing home sales now is the next point of contention. And then we go into the weekend with the Jackson Hole speech. Now looking ahead, looking at earnings, the big one to watch here is Walmart. But for you tech investors, you also want to watch Intuit, Zoom, and Workday. In fact, these are really good indicators of how the labor market is doing, right? So if their earnings come out strong, that's going to be a really, really good thing for the labor market and the consumer as a whole. But more specifically, the consumer we're looking at is for Walmart. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.